What is going on, investors? Happy Friday. That's right. We are back for our FAANG stock recap show where we recap all the FAANG stocks, the news of the week, the charts, plus we throw in a little Microsoft and Tesla. Big week for news, but also for the charts for certain stocks as well. I think you're going to want to hang around for the entire show. Kicking things off right now with Facebook. Started the week at about $269, slid off to about $261. When we get over the chart with Facebook, it's teetering right on an edge. So we'll talk about on Monday whether or not there's a trade set up for Facebook. Now, for the news, this actually came out right when I finished the video last week. Facebook is working on a smartwatch for next year. So similar to maybe like a Fitbit offering, which is now owned by Google, and obviously like an Apple Watch, Facebook is coming into the smartwatch where you can send messages through Facebook and you can monitor your health and your steps and stuff like that. So we'll see if that is a success or not for Facebook. Facebook blocks Australian users from viewing news content in a legislation protest. So two different stories here. When we get over to Google, they're playing a different strategy here. And quite frankly, I think theirs is the correct strategy. Facebook is deciding to play hardball in Australia. If you follow the news here on the channel, we've talked about it a lot on our recap shows, where Australia is passing a law, or I think they've passed a law where they're requiring Facebook and Google and other like news aggregators like that to actually pay for the content that is on the site. Now, obviously, it goes against maybe some of the things that you might think Facebook is all about, and that's obviously the argument Facebook is making. They're saying it's fundamentally misunderstands its relationship with publishers. Facebook might argue that, hey, look, people are sharing this stuff and then clicking over to the news content. Well, Australia still wants you to pay, and Facebook is deciding to play hardball now. So they decided to kind of like block you from sharing news on there, and it was kind of a sloppy rollout because they're relying on computers to do that. I guess government pages got like banned or blocked. Stuff on the virus got blocked. Charities were blocked, and Facebook's own Australian page were accidentally restricted when the ban went into place. So we'll see. This is, I think, a little risky, in my opinion, that Facebook is playing this type of game, because look, Australia is going to be just the first one to kind of implement this. You better believe around the world is likely to follow. Now, moving on to Apple, started the week at 133, also just slid down nicely, down to about $130 per share. When we get over the stock chart, this one also could be setting up for a Monday trade or a Monday ad, depending on how you look at these companies. Now, Lumineer, Velodyne shares gain as Apple talks with LiDAR suppliers for Apple Car. So lots of rumors this week on the Apple Car. We have some rumors that Apple is working with LiDAR suppliers, which is like a sensor that is needed for like autonomous driving and things like that. So Apple is working with these suppliers. And obviously that just feeds the rumor that the Apple Car is a serious undertaking. Now, Apple also, it appears, held talks with a Nissan and an autonomous car that have since ended because Nissan did not want to be just a hardware supplier or like a kind of a white label car maker where they're making the car and Apple brands it and kind of acts like they did all the work. Nissan wants some credit there, and it looks like those talks have broken down. Now, these other, so there's a company, that ticker symbol Watt, where their shares surged after a report Apple is working on a magnetic battery pack. So for some reason, shares of this company surged, even though they're not necessarily mentioned working with Apple, but it appears that just broadly, Apple is working on a device that will magnetically, secure to the back that will charge it. It's like a extra battery pack or something like that. And I guess this company, WATT, kind of works on those types of things. Interesting that this stock moved. I mean, it's up 90% today. So we'll see. Maybe there's some truth to those rumors. Now, Apple aims to lead the 6G, not 5G, 6G cellular technology development. Obviously, most of you might not even have experienced 5G. I've only experienced it a few times out here in California. I mean, it's amazing. When you're on 5G, it's like, wow, this is awesome. I can't wait till this is more widely available. But obviously, 6G is next, and that is not expected to roll out until 2030, but Apple wants to be like a leader in that. Now, they did buy they relied on Qualcomm's modems for their 5G, but Apple has acquired Intel's smartphone modem business in 2019 for $1 billion. So you could expect Apple developing their own modems and kind of technology behind 6G, which is obviously probably a solid 10 years away. But they're always thinking ahead over there at Apple. Now, Amazon started the week at $3,242, slid off nicely today, but down about 2%. We'll talk about where Amazon is in a range in terms of its stock price. Ended the week at $3,250. Now, movie theater chain and meme stock and AMC's been big time in the news. Well, it gained on recycled speculation of an Amazon buyout. So Amazon's been rumored more than once that AMC might be bought by Amazon. So we'll see what happens. This is the second time this rumor has kind of been floated. AMC stock is pretty cheap. It's like $5. I think it's been as high as 20 recently. So we'll see if Amazon decides that they want to get into the movie theater business. It would give them probably access to content and also access to customers, and it could remake the movie theaters, okay? The movie theater experience has not changed pretty much in my entire lifetime, and maybe most of yours as well. So it'd be interesting if AMC decides, or if Amazon decides to buy AMC, would they change that experience and maybe make it better? We'll see what happens. Now, this is an interesting one. Amazon buys Selz, S-E-L-Z. It's a rival company of Shopify. So, think Shopify, where it's a tool basically. If you want an e-commerce store, it's like almost like WordPress. If you want a blog, you get WordPress. If you want to sell stuff on your own website, you usually use Shopify. Now, I've been hearing rumors for over a year that Amazon wants to get big time in this business. They once had kind of an offering on Amazon where they allowed you to kind of have your own store and things like that. This is interesting because probably one of Shopify's biggest weaknesses is they don't have a lot of fulfillment technology. They're going to have to third-party that out or, use third-party fulfillment centers if you want that type of capability for your e-commerce shop. Amazon has that already built in. So it'd be interesting if you got Selz, would that allow me as an e-commerce shop to then use Amazon's back end of their fulfillment channel? So instead of having all my e-commerce items sitting in my own warehouse, I can send them to Amazon, but then sell them on my own website through Selz and not through Amazon.com. I know, and some of you might be like, why would anybody want to do that? Look, I'm in the e-commerce business. One of my businesses that I run is e-commerce, and that is something that e-commerce players really, really want. They want something like Shopify, but with the back end of Amazon to fulfill all the orders and things like that. And if Amazon can do that, I'm telling you, they're probably going to have a winner on their hands. And Shopify, not that they would be in trouble because it's still kind of a niche thing that an e-commerce guy would want, but it would strike a bow at Shopify, in my opinion. Now, moving on to Netflix. Started the week at $558, ended the week at $540. This is also a stock you're going to want to wait around to the end and see where it is on the price chart because it's at a very, very key level. Might be setting up for something on Monday. Now, Netflix, not a lot of news this week, honestly. So not a lot of news in Netflix. I'm not going to waste your time. So, moving on to Google. $2,085 per share starting the week. End of the week down today about $18. End of the week at $2,000, basically flat at $2,087. This one's also an interesting level when we get over to it. Now, I talked about when we were talking about Facebook, Google is playing a different game with kind of the news organizations with the Australian law and things like that that's requiring them to pay for content. Google's stepping out, and I think this is the right move. Google's getting out in front of it and starting these partnerships. So they decided to pay News Corp for content. This includes some Australian Sky News, includes the New York Post and the Wall Street Journal here in the United States. I think because this is such little money to these companies, especially Google and Facebook, partnering with these companies and, giving them just a little bit of money, like tens of millions of dollars, maybe not even that, is getting you out of the hair of the legislation and allowing legislators and lawmakers to decide. Instead, Google can make these terms on their own terms And that tends to be a better deal, in my opinion. We all know politicians, man, they can be clueless about almost everything. And I don't think I want them to decide how much Google needs to pay these news corps. So I like that Google is actually stepping in here and making these deals on their own. Moving on to Microsoft, started the week at $243, basically flat. End of the week at about $240 per share. Microsoft's also quietly making its own automotive autonomous vehicle push, but they're doing it differently than Apple. In my opinion, Microsoft is probably doing the right thing. And now it's not going to be as sexy from a press release perspective, probably not going to be as sexy from like a revenue and attention, but they are going to develop with Bosch a cloud-backed software platform for vehicles. We announced that they had another team up. I think they teamed up with maybe VW last week. That was on the show. And so Microsoft is slowly teaming up with automotive makers, automotive part makers for software platforms where they kind of provide the back end and these software makers kind of are out in the front end and the hardware makers are out in the front end. I think that's the play, in my opinion, trying to think that you're going to make a car that's going to compete with Tesla and maybe like a Neo and certainly like a Mercedes-Benz or an Audi. To think you're going to do that after making cell phones or software for the last 30 years, I think is a little cuckoo. I think doing this, what Microsoft is doing, is a much better strategy. Now, speaking of electric vehicles, Tesla, the leader, started the week at $798. Just felt like Tesla was just pulling back. Boy, you really want to hang around until we go over the Tesla chart because it is at a critical level. I am telling you right now, on Monday, I might make a trade on Tesla, and I'll show you exactly what I'm going to do. Started the week at $798, ended the week at $780. I know that's only like $18, but when you're really particular about these things, it can just give you confidence when you step in and try to buy or potentially sell these stocks. Now, Elon Musk makes the case for Bitcoin. Only a fool wouldn't look elsewhere. So Elon Musk obviously we talked about this on last week's show, invested about $1.5 billion into Bitcoin. I can imagine he's probably made more, Tesla especially, has made more money off that purchase of Bitcoin than they probably have in the history of their company in terms of profits of making electric vehicles. It's just incredible what Bitcoin has done over the last few weeks. And I got to agree with him here. Holding cash, which they are just printing and printing and printing, is kind of a really stupid thing to do. He says it's simply a less dumb form of liquidity than cash. And I agree with him here. And while it is risky, it is headline making, I think he's ahead of the curve here. And I would guess that more companies are going to do this type of thing going forward. Now, another interesting story here out of Tesla. They cut the price of their Model 3 and Model Y, which they've been doing several times over the last year. They've done it with the Model S and the Model X. So you can get a Model 3 standard range for $36.99, and that's down from $37.99, so down about $1,000. The Model Y looks like it came down about $2,000. You can get one for now about $39,000. These are the standard range ones, and that's down from about $42,000. Now there's performance ones that are a little faster and have maybe nicer interiors, things like that. Those is actually up from $54.99. Now you have to pay $55.99, which is a lot of money for a Model 3 in my opinion. And the Model Y went from about $60,100. So they raised the price on the performance models, but dropped kind of the entry level model, which I think a lot of people probably are interested in. So interesting move there. Now finally, Cathie Wood's ARK Innovation bought the dip on Palantir and Tesla. Boy, they really bought the dip on this Palantir. We did a video earlier in the week on this. Got a lot of interest on that. A lot of comments here on the channel. And boy, they really came in there and bought the dip on this one. So that was interesting. They bought about 90,000 shares of Tesla, which is a lot of money. But in terms of the assets that ARK has under their umbrella, it's not that significant. But that's what's interesting too, is Palantir was a great setup, and the fact that ARK came in there and dipped buy, the stock was up like 15% or 13% today. So the fact that they're dip buying Tesla, when we get over to the stock chart with Tesla, it just kind of reinforces, well, Monday could be a key day to come in there and buy Tesla. We'll talk about that here in a minute. Now let's start things off with Facebook. Like I said, that one is just teetering right on a key level right here at $260 per share. We talked about how the shares are trading about $261. I wouldn't necessarily want to come in here and pick pennies, but 260 to 261, right where the stock is a key support level. If we break that level, the odds of us coming down to the 250 level enhance quite a bit. Whether or not it happens to go through there, maybe it stops at 255. That's also kind of a level of support as well. But I think you've got an interesting setup here with Facebook. If you just want to add to your shares, I don't think it's a bad area. Would I go all in at this spot? No, I probably wouldn't, but you have, I think, in my opinion, a decent trade setup here as well. You could buy it around 260. You could set your stop loss at 255 because if it breaks 255, it's probably going lower. So you can put your stop loss about $5 underneath where you buy it, and I think your upside is back up to 270. So you've got $10 upside, $5 downside. Not the best trade setup, but it could be one that you potentially look at with Facebook. Now, moving on to Apple. This one is also just teetering right on a level here, right? I've got it marked out at 128.75, but we're at 129. A dollar either way is not that big of a deal. So 129, key level with Apple, in my opinion, as well. So if it breaks this 128 level, boy, we could come down here, not necessarily to 120. I think you could stop here at 124 as well. So you've got some, depending on which way the stock market and these stocks decide to go. If they break down, I think it increases your opportunity to come in here and buy this one. But if these levels hold, if Apple is able to hold this 128, 129 area, your upside is probably back up here to 136, maybe even 138. So some upside with these ones with some downside, but if they pull back, man, I'd be wanting to come in there and step in even more on these ones. Moving on to Amazon, we have been in sideways consolidation almost perfectly inside a box since November with Amazon. Now, it has bumped up above 3,300. 3,300 for Amazon has just been a key level that it just has not been able to break with any significant momentum. We're sitting right now at 3,250. It's almost sitting right on this 50-day moving average, which I see here is at 3,250 or so, or 3,230 actually. So about $10 lower than where it's at. If you want to come in here and buy Amazon for whatever reason, you're just dying to buy Amazon, this 50-day moving average, again, right at the 3,230 mark, which is about $20 lower than where the stock is today, could provide a level of support. Me personally, I'm way overweight Amazon. 3,100 is where I'm targeting. Whether or not I get that a second chance at it, I don't know. Any solid break above 33, and I'm talking about solid break. This thing would have to break and then just keep going. Then it's off to the races. This thing could, in my opinion, attack 3,500. But the way the chart is setting up right now, not necessarily something I'd be banking on. Moving on to Netflix. Just like all the other stocks, this one's at a critical level. So Monday is going to be an interesting day, and that you should pat yourself on the back for watching shows like this and then doing the research afterwards, because this could set you up for next week to make some really nice buys in some of these stocks. Now, Netflix is, it is sitting right at 540. 540 is a key level with the stock, not like the most locked in stone level, but it is an interesting level. So it could bounce here. We could be channeling up here from 540 up to 565 with Netflix. But personally, I'm not in Netflix, so I don't have a lot of bias here. I would look for it to break down to the 50-day moving average, which is at 530. I would take stock of the situation at that point. Netflix has broken below its 50-day moving average several times over the last 3 or 4 months. That has proven to be an outstanding place to buy the stock, is when we break this little green line that's here. And right now it's sitting at 530, about $10 lower than where the stock is. If we break down to 530, that would be the first spot where I'd want to step in with Netflix. Lower than that, 520 would be an area where me personally would consider jumping in on this one, because I think you still have some downside below 520, but a little bit more margin of safety than when we're talking about just on top of the 50-day moving average with Netflix. But boy, Netflix, Amazon, Apple, and Facebook all setting up for potential trades or buys or ads or whatever you want to do heading into Monday. Google, Not necessarily. I mean, Google's just been on fire. I mean, it sideways consolidates, pops up, and then sideways consolidates for like a week and then pops. Now we're chilling out up here. Okay, we're chilling out here around $2,100 per share. Google's just, I don't trade these types of things. It's just not a setup that I'm a fan of. You might be a fan of this. Certainly you could have made a lot of money if you played this momentum. It's just not the setup that I really like. I much prefer the setups of the stocks we just covered. So Google, I'm just waiting for either a pullback to fill this price gap, a pullback to 1919, or just see what happens with this one. I'm already in this name. I've got, maybe 2 shares of it, so I'm not really too concerned about that. Microsoft is chilling out at this is a really interesting thing that happened with Microsoft. So you see here that we were in a strong uptrend, and then it kind of broke it and sideways consolidate. Now, 245 is a hard kind of like upper end resistance. A break above 245, especially a solid break above 245, would be very bullish for Microsoft shares. Although we've been on a monster run, okay, over the last really just a month or so, this stock has been on a monster run. It was like 213 about a month ago, and now we're trading at like 240. So some sideways consolidation, a breather up here from 240. If 240 continues to hold, which is exactly where the stock is right now, if that level continues to hold, I like this one there, and then resuming some kind of uptrend. If we break 240, a pullback to 232-ish, somewhere in that range, I would be a buyer, in my opinion, of Microsoft. Now, finally, Tesla. This one also is setting up, if you want to dip buy like Kathy Wood did, this is setting up for a Monday trade that could be a good one, although Tesla really moves around in the early morning, so you might not get it if it tends to pop. But we're sitting right here at 779, a break below that, and look out below. This thing could easily come down into the 650 range, in my opinion. There's not a lot of buying from this stock from 650. This stock went from 650 to over $780 a share, like in a couple days, and just really quick. It was like, a rock skipping across the water. It just went boop, 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 all the way up. Okay. And that's not a bad thing. Okay. But on the way back down, the price can just cut through that action like a hot knife through butter. I see another level here where this thing could potentially stop right at $700 per share. So depending on how risky you want to be and what kind of cojones you want to illustrate to yourself and your trading account platform, look, this one's sitting right at 780-ish. That can be a place where you step in because you have upside to intermediate term back up to about 815, and then back up to the all-time highs, which are $892, $900 range, somewhere in there. So you've got, almost, that's about $120 worth of price action that you can get to the upside. And I think you've got about $80 to the downside, back down to $700. Not the best risk reward setup. I'm more talking about if you own Tesla already, you're a big believer in it. You love what they're doing with the Bitcoin, with the cash on the balance sheet, those types of things. You love what they're doing with the cars and all the other stuff that they're doing. Well, a dip buy on this one back to 700, I'd get really excited about. Will I step in here at 780? I'm going to think about it over the weekend. I'm not exactly sure if I want to step in here at 780 or just hope that I get a shot here at about 700 if we break this level. We'll see what the momentum is and the tenor of the market is over the weekend and then heading into Monday. But boy, you've got some great setups. Facebook, Apple, Amazon, Netflix, and Tesla all are setting up for potential Monday trade opportunities or Monday buying opportunities if you got an IRA or a 401k or something like that. So hopefully you guys have a great weekend. Enjoy yourself. We'll be back again soon with more videos. Good luck with your investments.